Hello friends, welcome to my YouTube channel Learning and Skill Hub. So in part 1 we are discussing about the learn how to invest in the stock market by Warren Buffett and Benjamingraham. This book was written by Mr. Dalmia. So earlier we are discussing about the key things which we needed to know before investing any company. In this part we will discuss about the 7 golden rules which are need to know before investing any share and any company. So the first rule is company's market capitalization. Company's market capitalization must be enough, or either we should invest in large or mid cap, because in large cap or mid cap companies the risk considered is comparatively very less with respect to the small cap companies, because the large cap companies are already grown and less volatile in the stock market. Second point is the company's financial condition. So company's financial condition must be stable. So for that we need to study about the current ratio, which is must be greater than 2, and the long term borrowing must be less than the working capital. In third point, the company should have the profit or increasing trend of last 10 years. Means the profit must be stable and the must have increasing trend. In fourth point, we must check the annual income also, and also for last at least 3 years, and it must be increasing trend in by the 10%. So we should check the operating cost, operating profit, and revenue also, that the profit comes profit occurred by the company must become the company's operating revenue only. Okay, many times it has been seen that the company's profit is abnormally growing, but after when we will see the company's financial statement, and we find that the company's revenue is decreasing but the profit is increasing, it may be due to the revenue or the profit is coming from some other sources. In next point, PE ratio must be less than 15. It is better to invest. Sometimes PE ratio up to 20 is also acceptable. In next point, price to book value, it must be less than 1.5. If the PB ratio is less than 1, the company will be considered as the undervalued, and if company have PB ratio of 1 to 1.5, the company is considered as the fair valued, and after that company comes in the category of overvalued. So we need to check the PB ratio before investing in any company or any stocks. Next, we should also check the dividend record, and it must be that in last 10 years company must have paid the dividend to the shareholders, because if company is paying dividend, it's obviously company is profit making. Next, EPS. So EPS also must be increased by 10% by year on year. Next, we should check debt to equity ratio. So debt to equity ratio value must be less than 2.0, or if any company's debt to equity ratio is 0 or between the 0 to 1, company is may be considered as a good investment, because if company is having less debt, and so there might chance of the bankruptcy of any company. Next, we also check about the financial statement and the quarterly profit of quarterly profit and quarterly return given by the company. Next, we also check the promoters holding. So before investing, we must check that the owner must have the greater than 50% stakes in the company, so that the owner may drive the company according to his vision. If his stakes is less than 50, then he will feel difficulty to take any decision for the company's growth. Thank you very much, my friends, for watching the video. Please do like and subscribe my channel. Next part we will discuss some more things and other book summaries. Thank you. Thanks a lot.